Okay, so when you hear the word investing, what's the first thing that pops into your head? Probably the stock market, right? The Dow, the S&P 500. But what if I told you there's a whole other universe of investing out there? I'm talking about getting in on the ground floor of the next big thing before it ever hits Wall Street. Seriously, a revolution is brewing, and it's completely changing how companies get funded and, honestly, how wealth can be built. So let's get into it.
First things first, we need to get one really important distinction straight. You've probably seen those crowdfunding campaigns where you chip in some money for a cool new gadget and a few months later it shows up at your door. That's called rewards crowdfunding. What we're talking about today is a whole different ballgame. It's investment crowdfunding. Here, you're not getting a product. You're getting equity, a real piece of the company. You're going from being just a customer to being an actual owner. That's the game changer.
All right, so here's how we're going to break this down. We'll start with the current rules of the road, how things work right now. Then we'll look into the crystal ball at what's coming. New laws, a new type of investor, and some mind-blowing tech. And finally, we'll wrap it all up and talk about what it all means for you. To really get a handle on where we're going, we first have to understand where we are. Right now, if a company wants to raise money from the public online, there are basically three main paths they can take. Let's walk through them. Path number one is regulation crowdfunding, or RegCF for short. You can think of this as the main entrance for most startups. It lets them raise up to $5 million from, well, pretty much anyone. It's awesome for companies that have a strong community they want to tap into. Moving up the ladder, we've got Regulation A. People sometimes call this a mini IPO, and that's a pretty good way to think about it. It allows more mature companies to raise a lot more money, up to $75 million. The trade-off? It's a bit more complicated to pull off.
And then there's the big one, Regulation D. This is the absolute powerhouse of the private markets. The fundraising cap here, well, there isn't one. It's unlimited. We're talking trillions of dollars flowing through this pipeline. But, and this is a huge but, it's basically an exclusive club with a very strict guest list.
So let's just lay it all out, right? You've got two main doors open to pretty much everyone. RegCF for the smaller guys and the more involved Reg A. But then you have this VIP entrance, Reg D. This one's got no fundraising limit, but it's mostly roped off for a special group we call accredited investors. That's the playbook we're all playing by, at least for now. And this is where the story gets really, really interesting. These rules we just talked about, they've been the law of the land for years. But there's a movement afoot, a series of proposals that could fundamentally reshape the entire private investment landscape. So let's talk about the future. There's some serious legislation on the table that's designed to drag these old investment rules kicking and screaming into the 21st century. One of the centerpieces is something called the Clarity Act. The whole point of it is to finally create some clear, modern rules for how digital assets get issued and traded. You know, in a world of crypto and blockchain, the old regulations just don't quite cut it. This act is trying to bring, well, exactly what its name says, clarity. And its goals are pretty straightforward. Step 1, set clear rules for creating these new digital securities. Step 2, and this one is a huge deal, is to enable secondary trading. That means creating a market where you could actually buy and sell your private investments. And step 3, bring it all together to expand access to more people. Okay, so changing the rules for companies is only half the battle. The other side of the coin is just as important. Who is actually allowed to invest? Because that definition is a really, really big deal. Remember Reg D, the one with the unlimited cap? That entire multi-trillion-dollar universe is governed by a single two-word phrase, accredited investor. For decades, that term has been the gatekeeper, deciding who gets access to the most exclusive investment opportunities. But that could be changing. Congress is actively considering bills to modernize this definition. Just look at the names. The Fair Investment Opportunities for Professional Experts Act, the Equal Opportunity for All Investors Act. The mission is right there in the title, isn't it? Widen the circle. And this, right here, is the huge shift in thinking. It's a total pivot. For decades, the only question was, how much money do you have? Your income, your net worth, that was your ticket in. But these new proposals, they're asking a totally different question. What do you know? So if you've got certain professional licenses, or you've passed a specific test, you could get access. Your bank account suddenly becomes way less important than your brain. Now for the third and final piece of this puzzle, the part that's going to pour jet fuel on these new laws and new investors, technology. We're talking about tech that's making financial markets faster, cheaper, and more accessible than ever before. The key concept here is tokenization. It sounds kind of futuristic, but the idea is actually pretty simple. You take the rights to any asset, a share in a startup, a piece of a building, anything, and you convert those rights into a secure digital token that exists on a blockchain. So who cares? Why does this matter? Well, for three main reasons. First, automation. You can program these tokens to do things automatically, like pay out dividends. Second, efficiency. It slashes the insane amount of paperwork and administrative headache that comes with private deals. And third, it opens the door to creating all sorts of new and creative investment products. And listen, this isn't some science fiction fantasy. This is happening right now. Billions of dollars in assets have already been tokenized. You've got major platforms like Republic with their mirror tokens, and even household names like Robinhood are making big moves in this space. The tech is here. Phew, okay, so we've covered new laws, new investors, and new technology. Let's pull all these threads together and talk about the bottom line. What does all this disruption actually mean for founders and for everyday people who want to invest? When you boil it all down, it's about creating a better, more open market for everyone. For the entrepreneurs out there trying to build something new, it means more ways to get the funding they need to make it happen. And for investors, it means more access to the kinds of opportunities that used to be hidden away in Silicon Valley, allowing you to invest in the future you want to see. But we have to be really clear about something. With all this new opportunity comes risk, and it's so important to remember this phrase: failure is not fraud. Investing in early-stage companies is risky by nature. Most of them won't make it. That's just a fact of innovation. The point of these new rules isn't to get rid of the risk, but to give more people an informed choice to take it. Which leaves us with one last big question to think about. For generations, the future has been funded and built by a pretty small, exclusive group of people. If that door really gets kicked open, if investment is truly democratized, who gets to build the future then? The answer just might be all of us.